What does it portend for the financial markets in the near term that May didn't get off to a rousing start and April ended on a down note?
It is tempting to use the phrase sell in May and go away, but I've always had trouble with that one because sell what and go where is always the question. But I do think that the stresses that we've seen as we ended April on a down note, despite trying to rally in the morning, and beginning May on a down note, helped downward by some poor readings in the ISM, definitely are making people a little more, I don't know if not nervous, but rethinking possibly some of the bullish thesis that they've been going with. One takeaway would be we're more than halfway through earnings season at this point. There's still some very big companies left to come, but as we're taping this, more than half of the S&P 500 have reported. In general, the earnings have been pretty good, but the market isn't looking for pretty good right now. The market was looking for great. And even in the sense when the companies beat, the mental calculus that went into some of these, the whisper number, which is a term I've never particularly liked, but you had the whisper numbers in some of these cases, or at least just the mental hurdles were so high that a lot of these companies did well and still couldn't beat them. And that becomes in itself a real difficulty. And that doesn't necessarily bode poorly for the market, but it seems like we really need to build a base if we were going to attempt another rally. One thing that's interesting from an options point of view is the VIX seems to have found a level around 15. And that probably is about right for what we're seeing now. 16 is roughly equivalent to a 1% move on a daily basis. That's more or less what we've seen. Remember, it's not necessarily close to close. People tend to think of historical volatility as, well, what did it do one day versus the next day, and it was unchanged, so therefore the volatility was zero. That's not really the case. In many, it's clearly possible that you could have the equivalent of a 1% intraday move, and option traders think in terms of the intraday vol on an ongoing basis, not close to close. So going back to it, it's not a perfect comparison, but the VIX is a 15-16 VIX, implies roughly 1% one-day moves. It seems like the market has kind of gotten used to that. And I guess that in some ways may mean that the short vol trade is well and truly dead. I hate to put the epitaph on any single event and say that that's the case, but I think people were shaken a little bit, and some of the moves we've seen make that go away. But this now becomes a very interesting period. We'll see how the rest of earnings period goes. We'll see if external forces cooperate. The dollar taking a leg higher isn't necessarily good for multinationals. We'll see if that move persists. There's a lot of moving parts right now. There's a lot to be cognizant of. I think what that suggests is traders should be nimble and managing their risks, which is something you should always be doing anyway.